Of course, Casey's with Hanghold Capital Management, and Casey, you took on a new client recently, and I guess when this happens, you go back and look through their history of their savings and whatnot, and you can find some pretty interesting things when that happens, and they're not always pleasant. What happened?
No, she happened to live out of town, and we had a phone conversation, asked a lot of questions, and many of the questions, as I listened to her answers, were focused very much on her desire to retire in the next few years. She and her husband are in their early 60s, and I asked several more questions that they had to provide some data for me, and so she sent me her statements in the mail, and it was very interesting in reviewing her statement. On the front page of the statement, this was an IRA account, the investment objectives were listed: primary, speculation with a high risk tolerance, and a time horizon less than 5 years.
Well, if you're in your early 60s, you're not usually looking for high risk.
No, and being speculative, and again, all her answers were, I'm focusing on retirement. And as I looked into the statement a little bit further, 98% of the account was invested in stocks, 28% of the account was invested in one stock. It wasn't even her employer. And when you looked at the activity in the account, the purchases and sales added together were almost 4 times the amount of money that was actually in her account. So obviously the broker was churning the account.
Yeah, he's just making commissions.
Yeah, it was very, and that wasn't even very apparent. You had to get a calculator out, do the math, because the commissions were listed in dollar amounts. You actually had to add up the buys and sells, and then you could see the commissions were adding up to over 5% of the value of the account. I mean, it's like, you have to be kidding me. This is not appropriate for someone in the early 60s with the goal of retiring in mind. And, I asked her about these trades, and she said, the broker called me and would recommend the trades. Her perspective was, he's looking out for me, right?
So that's something that's unethical but not illegal?
No, but what's changing is the standard of the fiduciary standard, and it's going to be applying to retirement accounts in the future. But, this needs to really apply to all accounts. And I actually, in backtracking a little bit, I would say what he was doing was unethical because all those things were not adding up to her objective. But, it's almost he had a little CYA by putting on the front primary speculation. If somebody has it listed on their account, they're essentially agreeing to these types of terms. But the fiduciary standard, it's a standard that needs to be the standard for all types of accounts, retirement or not. That's the problem with our industry. If you had the fiduciary standard, there's no way this would be acceptable.